Good evening and welcome to the Accendo Traders Group. This is our stock market wrap-up for Tuesday, March 17, 2009. AccendoTraders.com, effective video, technical analysis, trading plans delivered daily. Each time we come together, we try to prepare ourselves for the next trading session by looking at our open positions and adjusting our stops, seeing what news happened today and what's coming out tomorrow that could move the market or affect our open positions. Check the sectors, see where we are, what trends might be developing. We always take the time to scan for new trades that have good, safe, positive entries for the next trading session, and so we want to set alerts for those entries. And by having a trading plan and a focus, we have time to release and spend it with our family. So, what happened today? Well, hopefully, one thing you can hear is that my voice feels better, so I'm getting over my pneumonia. A lot more energy today, so for our Twitter folks, I should be back in full-fledged tomorrow. I was real light the last 2 days, but I will be back tomorrow for those of you who follow me on Twitter. So our financial stocks, as we know, they're 23% of the S&P 500, so they led our way. They once again led the market. Yesterday after the close, we had Alcoa, and this kind of worried me a little bit because obviously Alcoa is part of the Dow, and I thought it might pull the Dow down a little bit. But Alcoa warned about their first quarter losses, and they cut their dividend to just a couple pennies, I think. So that certainly wasn't good. The inflation data came in line, but surprisingly, the housing information was pretty good. Anything that's better than expected is pretty good. So there's still concern over the inventory that's out there, but there was an uptick in the building permits and new builds. We also had some concern in Nucor and Rio as far as first quarter earnings, and that kind of affected how well the materials sector did. We did have all our sectors in positive territory for today, but again, Nucor and Rio, both being in that basic material sector, did affect its overall strength. So there we go. The Dow ended up, and again, as we get to our charts in a moment, we'll see it's not just where we ended, it's how we got there. That's important. The only reason I'm sharing DART is because that's a retail, and retail has really been doing well. So they beat their numbers after the close. And as anybody that's been watching, MGM's been in the news for the past couple of days about whether or not they need to raise more money. Billionaire investor Karl Kevorkian, and possibly selling off the stands. And there's some news going on with MGM. So the casino sector certainly has been taking a hit. Look at all these upgrades today. Gold sector, ABX, FedEx. FedEx has got crushed over the past month. So it's about, I had upgraded just based upon the chart. Costco, UNH Healthcare, Home Depot. Look at Home Depot and Lowe's. Kohl's and Target retail sectors, again, something that we need to be looking at. Downgraded was Goldman Sachs and Morgan Stanley. Again, that worried me along with the Alcoa. I thought the market would be down. And although we did start off down, it's where we ended, baby. So tomorrow, what do we have? We have some more inflation data. Of course, it's Wednesday, so we got crude inventories, and then we have the Fed rate decision. Obviously, not going to be lowering rates, and I doubt they'll be raising rates. But again, maybe they'll put out some positive language about the economy that could really continue this rally. Because again, we certainly have moved a long way. The pullback certainly needs to come eventually. But if we get some good language out of the FOMC tomorrow, watch out. We will definitely clear the 50. Still nothing going on the earnings front for tomorrow. Nothing of impact, and nothing really impact on the split calendar. Before we look at the three major indexes, I want to make sure we take the time to remind everybody that in 2009, we're really going to be using Twitter to get our alerts. As a part of our 30-day challenge that we have. So I want to make sure that you guys check out twitter.com/AccendoTraders to sign up to get our free alerts. All right, so look at the day that was. Yesterday, we were kind of worried about this inverted hammer because obviously it's not where we started, it's where we ended. And we ended down, and we did initially go down just a little bit today, and then we rallied for the rest of the day. So obviously the difference between yesterday and today is that yesterday at 2 o'clock the market began to sell off. Today at 2 o'clock the market kept on chugging, and we closed at the highs. So look at this move that the market has made. The market is certainly moving along, and it's certainly within reason to think that we're headed to the 50. And when you think about what we were talking about on our Sunday newsletter, we talked about, the likelihood of the S&P 500 reaching 8,000, and we used the January lows and the 50 moving average as our way of kind of coming up with that target and using Fibonacci's a little bit. And so what we're looking at is, here we are, there's the January lows, and here's the 50 moving average. It's a little bit higher before, and it certainly again looks like a reason. Now, we thought it'd take a little bit longer to get there. Didn't think we'd get there this week or in 2 days, but it does look like we're going to get there. Now, take a look at the NASDAQ. Woohoo! Already there at the 50. Again, we've been saying the NASDAQ let us down, and the NASDAQ's leading us higher. So that is certainly positive news. Let's go ahead and take a look at this on the intraday chart. Okay, here we are looking at our intraday charts. We've got the 3-month daily chart on the diamonds. Here's my 50-minute chart on the diamond. Here's my 2-minute chart, 5-minute chart, 2-day chart on the diamonds. I got a tick chart going on here with my pivot points. And what I want you to notice on this one is the market did kind of sell off here in the morning, and that's okay. If you think about it, that had a lot to do with this hard selling into the close on yesterday. So we probably had some remaining sell orders, market orders. That's why they call it amateur hour. But I want you to really pay attention to is this point right here. This is a failed new low. We got a low here. We weren't able to retest this low. We weren't able to break this low. You can call this a W pattern. You can call it a double bottom. You can call it a failed new low. But this was your signal to get out of your shorts. The market has the potential now to go against me. If we go to the educational portion of our video, using the book Trading in a Zone by Mark Douglas, the market's perspective and the uncertainty principle, we're going to continue what we talked about yesterday, which is the ability to make yourself available. You really could compare this to dating. You have your heart broken and you're out with your boys, you're out with the fellas, you're out with the girls, and are you strong enough to get back out there in that the pool of fish after your heart's been broken, after you've been shut down, turned down, all of that. Can you make your heart available? Can you make yourself available after a bad experience? Can you make yourself available after a good experience? Your relationship could have ended positively, but can you get back out there? Or are you going to compare this new relationship to the old relationship? All the fellows say, baggage. Making yourself available to trading is one of the most important things you can do as a trader. It's one of the hardest things to do, and that's why we always talk about paper trading, to get yourself used to the emotion of trading, and why we talk about having a trading plan to remove the emotions from trading. But making yourself available is what separates the good traders from the bad traders. When you are holding back because of fear, holding back because of your past experiences, you actually take your trading skills and make them blind to the new opportunities. How many times have you been in a trade and you get into the tick battle? It's going against you, but you get a tick in your direction. It's going against you, but you get another tick. It goes 3 against you, 1 for you, 4 against you, 2 for you, but you're getting that tick battle. Most of us can look at that and say, oh, there's a trend forming, but you're blind to the trend because you're fighting the tick battle and you're ignoring the war's over. The trend's going against you, and you're in the middle, the mini battle of the tick. So, making yourself available, trading from a standpoint of rules and criteria versus emotion is what gets you down a path to successful trading. Versus trading out of fear, which blocks out signals, blocks out the obvious, and you don't see it until the minute you get out. How many times we got in a trade did you say, why didn't I get out earlier? So remember, every Sunday now, we're going to be having the Jumpstart trading session, Jumpstart your week, 8 o'clock on Sundays, and you can get there. We'll have a room available like we used to do before on Accendo, accendotrader.com/jumpstart.html. It won't be active, obviously, until Sunday. To get our picks, this is just a wrap up of what happened today, but to get our trades for tomorrow and what we think is going to happen for tomorrow, you got to become a paid member. We do have a trial subscription that you can go. If you go to our link there, accendo.com/video.html, and follow us on Twitter. Again, I'm feeling better over the pneumonia, and I definitely will be putting out more information on Twitter tomorrow. Thanks, guys. Trade at your own risk. I will see you next time.